Good evening, everybody. I was supposed to put up my schedule or do up my schedule. We're going to, in the next few nights, and I'll hopefully know by the end of the night when I write everything we got it. Next few nights, maybe, what is today? Monday, Tuesday. I don't know if I'm going to do this right. We're trying to refine the scanning techniques for sink or swim. Seeing if Ed helped me out quite a bit. But we still got, there's Ed. Ed and I went through a good hour and a half of trying to sort things out. So here's the project. I'll let everybody start working on it. I don't know if I can do this. So I did that. What I'm doing here. Oh, pshaw. Whoops. Let's try this again. Okay. So, see if I can talk. Now, I've lost everything. I thought I could do this with some elegance, but apparently not. Crying out. Hold on. So why I'm doing this? Well, what we're trying to do is streamline the scanning techniques for sink or swim. I've gotten back to. So this is what I was trying to do. We've got box lists, and this is where we can do the scans for best friend, scan for left-right combo, or do up the list. But what I'm trying to do, and we didn't seem to be able to latch on, that I want to do my my bucket list setup. So I want to figure out a way, number one, how to set up the bucket list. And this will be a bucket list that we add picks to, or when we do our scans, we try to find the best trade and move it to this bucket list. But then I want to keep this bucket list and figure out how the next day we scan the saw. I am just not doing this right. This makes you want to kick your grandmother. Back to scan. All right. Now I need to get that is. Okay, so let's see if I can do this again. So what we want to do is, once we put things on Monday into this group, and then Tuesday we go and do our scans again, and we put more into this list, but then be able to take that list back to the scan and scan it for the biggest percent moves that day. So we still have the good ones up on top. I guess I've screwed that up trying to explain all this, but we're trying to be able to sort so that each day we've got that we're adding to the bucket list sorting by or scanning them again, see which ones had the biggest percent move, and then do our cultivation process, which is moving it up to watch list 6, 5, 4, and so on. Okay, John. So, anyways, that's what we're going to try to do. And as soon as we get a time set up, which I hope will be either tomorrow night or Wednesday night, if everybody will come with their ideas on how to get to those, or how to speed up the scanning process. Unfortunately, not unfortunately, but I'm going to try to find people that have set up the technique and kind of add that to everybody. And so this is the reason we're doing it like this, or want to do it like this, is because we've got the different scans. Well, shucks, I thought I had it figured out. Apparently I don't. Nope. I thought I could really illustrate. So I can see that I am just screwing this up royally. So when we did our scans yesterday, oh, is that all I have to do? All right, that's stuff that instead of trying to dig around, what happens if you sort by percent gain? That's what I'm trying to do, is how do I take the next list? So if I've got my bucket watch, and let's say I put 15 good charts on, and now I can go through and analyze which ones are better and move them up to 5, 4, 3, 2, 1. So tomorrow I want to empty those 5, 4, 3, 2, 1, and I put another 15. So I've got 50 stocks in watch list 6. Now I want to sort them, that list, by the biggest percent move. Well, CB, I'm trying to analyze which ones are the best. But I don't know how to get my watch list back over to the scan. So anyways, I'm going to try and do it now. Let's move on. So anyways, that's the type that we're going to try to do for everybody, is to kind of develop a system and using Think or Swim. Now, I'm going to jump ahead here. I think when Ed and I did it yesterday, looking for the best friend signal, that's what we found here in Sting. Sting was the first on the list. So that would have been a good trade setup going into today's trading. And why I didn't put that one up as a recommendation, I don't know. But you can see what's happening here. You can see where it's approaching right there. All right, Jeremiah. Yep, this is all stuff that if we add everybody's inputs together, maybe we can massage this to make it real good. CB, that's what I'm going to be looking for. So anyways, this is what we could come up with, or what we come up with for putting that on the watch list. Okay, so as we saw today, it backed off a little bit, but the important facet of this trend is just the statistical probability. It says as long as we're trading above the T line, we've got an extremely high probability that we're in an uptrend. And this is what the transformation index looks like, hovering right here, the T line. So with that, we were recommending Wi-Fi today because you could see the pattern setup. So this still becomes a viable, even though it backed off. It's still a viable pattern because if it opens positive tomorrow and starts trading positive, still looking for this left-right combo, doji sandwich, consolidation, and then look for it to move up higher from this point. All right, so the reason I was pointing out today that the biotechs with Labu starting out pretty strong, the biotechs are still in good shape. ARAV needed to open positive and trade positive. Well, it opened lower and started trading back up. I would not buy on a red inverted hammer. Which one was that, Brian? Bing? That wasn't an inverted hammer. That was a doji. Oh, the transportation. Okay. So I guess the rhetorical question is, why wouldn't you buy on a red inverted hammer? Remember what your shooting star, your hammer, your inverted hammer, your hanging man, what do they mean? It's not the color of the little body. It's the fact that you've got an inverted hammer signal. So positive trading after that, no matter what the color is a signal. So don't divert away from the signal just because of the color of the little body. So here's AMRN. You can see the support at the T line after your McMuffin, Morningstar signal, doji sandwich setup. You can still be buying this one with the J-hook pattern in place. Now this is all part of that the fact that the biotechs are working. Look at AB or BBIO. Another one that started up from a doji sandwich, now breaking out. Fry pan bottom classic. ENCH. Stay long. I'm going to go down through these quick because all of them pretty much just stay long. Here's ATRA. Now breaking out. That one can be wave 1, wave 2, wave 3 with the added evidence they bounced off the 50. Now the bullish Harami breakout, look for wave 3. Now the reason you can be more confident or more aggressive on the next is because that whole sector is acting well. So that means each individual stock isn't being bought itself as a fluke for that industry. It's pretty much that somebody across the board or everybody across the board are buying the biotechs or the pharmaceuticals, and that means there's an investor sentiment out there that makes that sector strong, and so that's part of all your putting all your stars in alignment, that you want to be in the sectors that are showing the good strength. That's the recommendation today on EPZM because of the kicker signal. Kicker signal what? J-hook pattern. What do we expect from here? Well, if it opens positive, we got a doji sandwich. At worst, we've got, we've got that 45-degree projection. Now, on the other side of the coin, if you have a close below the T-line, close it out. Worst case scenario is if it opens positive, trades positive, you can always buy back. So maybe selling here and buying here and giving up 62 cents was just insurance that you weren't holding on to something that's coming all the way back down here. Oh, there it is. This one is your 2+2 analysis. Fry pan bottom with a very strong belt hold followed by a doji sandwich. Now look where you're sitting with a doji smack dab at the beginning of the fry pan bottom, right in the 50. If it opens positive, what do you got? Well, first of all, you got the doji rule. It's going to trade positive. Secondly, it's probably going to do a doji sandwich closing up here, which means you've broken out. Where's your next likely target? At least coming back up into this area to fill the gap. But we expect coming out of a fry pan bottom. We expect a strong price move. Fuego. There was that doji sitting right on the 50. Opened lower, or about the same, started trading positive. So what do you got going on here? A J-hook pattern bouncing off the 200, followed by a bullish flutter kicker signal, one of your strongest signals, followed by a doji sitting right on the 50, bullish confirmation. There's at least your next target. Just on the factor of wave 1, wave 3, and confirmation that there's going to be more upside after your doji sandwich. Right now we're just saying long on EH. How long do we stay long on this? Until we see a sell signal and a close below the T line. OMF. Looks like a slow curve. You can be buying this one on positive trading. Again, use the T line as your stop. AXSM. There's your J-hook pattern setup with a bullish engulfing signal. This was wave 1. Wave 3 could take you up into about the $65 area. So that close below the T line is a high probability setup. When you had the bearish Harami and it started showing selling, where was the likely target? Down here to the T line. What did we need to see today to stay long if you were long on this one? You needed to open positive and trade positive. With it closing here, you close it out. What's the worst case scenario? Does a morning star signal, J-hook pattern, you can always buy back. So we've got some like I. Still just drifting higher. IRWD. Still higher, getting a little bit toppy. So what's your strategy if you're holding on to one of these? What's your safety stop below the T line right now? And NTLA. What did it need to do today? It needed to close above the T line. So you got basically a bearish doji sandwich closing below the T line, stochastics heading down after kind of a dark cloud, bearish doji sandwich closed below the T line. What do we know about that? Pretty much tells us the bears are taking control. You should have closed it out. Yes. Okay, what else do we got here? Crisp. Nice uptrend. What was the difference today? Today they did a bearish signal and a close below the T line. Would you short NTLA? You can. But you definitely, want to see, confirm, where do you think the target would likely be? Right back to at least to the 200. So is that a big enough percentage? I guess that's about a 10%. So you could short it. Hold on to your individual ones till we get down here. I'll get to all of them. Crisp yes, you could go short on weakness. Now, you got to be careful. When I say short on weakness, look what it's been doing with the T-line this whole way up. Stayed above the T-line until today. So before I would start jumping in, unless there was news of some sort, before I would jump in, I would want to see if they're still going to close this below the T-line in tomorrow's trading. All right, so when we got up and the market was trading up, Labu was opening positive. So it's still uptrending, and that was kind of the indicator to tell us that we probably wanted to be looking at biotech. Tesla, that's probably a good one to get ready to buy on positive trading. You've got kind of that little bullish flutter kicker signal and closing above the T-line. Where's a likely target? At least probably filling the gap up here. Go through some of the biggies. Facebook, slow, steady uptrend. You just stay with it. NVIDIA was having a hard time getting going today. Sitting right here on the T-line with indecisive trading. That kind of gives you a warning that there isn't a lot of strength at or above the T-line. You want to make sure that if you had gone long, it better open positive and trade positive. If it opens lower, what's it telling us? It's going to kind of run out of steam. So Amazon, nothing there yet. Having a hard time getting going. Apple backed off today, which, if you were trading this, notice what it didn't do. It didn't do a signal. It closed still above the T-line. So what you really need to see this one do tomorrow is stay above the T-line. What you'd really like to see it do is come back up through this level, giving you this trajectory versus this trajectory. Netflix hasn't been able to get out of its own way. Still, that'd be a toughie to trade. I wouldn't be long or short Netflix right now just because really don't have, even though it's below the T-line, it's not doing it with any great resiliency to the downside. And I'm putting Beyond Meat, because notice what happened here. It didn't confirm the Morningstar signal, sold back off. So if you stayed short, continue to stay short. Now the problem may be that you're in a downtrend like this. If you're short, what we're hoping to see is that you're in a downtrend like this, kind of a bearish J-hook pattern. Okay, what other ones do I have here? Those are the ones that we're trading. Now here's one that I'd probably be recommending tomorrow. Look at your cradle type pattern with a best friend gap up. We'll probably be recommending this one on positive trading tomorrow. And then we've already looked at this one that we've already been in because of the close right here on the 50, that if it opens positive, you've got a 5-pan bottom breakout through the 50-day moving average. Another one that kind of fits that description, CTMX, also sitting right here, and I'm on a 5-pan bottom right on the T-line. It can be bought on positive trading because of your doji right here. If it opens positive to the doji sandwich, it's broken out. Now, the reason you want to be more attentive to these trades is because we can see that it's got kind of a fry pan bottom. The people that are non-candlestick investors are looking at this, seeing whether they can finally get it back up through that level. What that does, though, is because we can see the fry pan bottom at a potential breakout, that if it opens positive tomorrow, we can be buying immediately for two reasons. One, because we know it would probably trade positive. Two, because the magnitude of the move might be like this. 3, if it doesn't work, it closes back below the 50, we can be right back out with a small loss or hold on to it for the next day. But what's everybody else going to be doing? They're going to be waiting to see if it's going to stay up above the 50. That means if I was buying right here, other people are buying here because they can see it went through the 50, and they're usually now coming in to confirm. Yes, the belt hold is meaningful because it's telling you buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers, zip, sellers. And then bam, they soak up all the sellers. So there's less sellers in a way. So that means any buyers now are running into less resistance. That's just added confirmation that any buying is going to continue that pattern. That was our same criteria over here when we recommended GOSS. Belt hold, started buying in here because you had a fry pan bottom with a belt hold, T-line crunch. Now it's still in an uptrend. KC, that's too much information. It doesn't matter. Doesn't matter whether it has 30% float or short float. Doesn't matter whether it has a 20% float and 80% institutional buying. Doesn't matter if it has 40% insider buyers. All we're looking at is what are they doing with the price right now. Everything else is insignificant. All we're looking to see is, are they buying or selling? We don't even need to know the reason why they're buying or selling. We just want to see what the charts tell us what we're looking at. There's your bobble breakout on Under Armour. Another one that has an extremely high probability of trading higher because of the bobble breakout. Where's your first target? Up here. At least you're running in a positive direction. And Derm. Another one that has kind of a bobble breakout setup. That if they break through this resistance level on this big move, tells you there's everybody and their brother who's watching to see what's happening up to 200 will start buying. So if you buy onto the trading, what's your two prognoses? One, if it opens and then closes back down here, you close it out and wait for the next buy signal. Two, if you buy it here with the expectation that everything's turning up, that everybody else starts piling in, you're in well ahead of them. Another breakout situation on Fro, one of the trucking firms. But notice your doji gap up, and this is always important to remember. This is why I repeat it over and over. But if they're gapping up into a perceived resistance level, that means they probably don't have that much worry about that resistance level. So we want to look at the fry pan bottoms. Gates, fry pan bottom, this. Trades positive, you got a fry pan bottom breakout. CLDR, there was your fry pan bottom breakout. See kind of your fry pan bottom breakout in this area. This is what we expect, big upside move. All right, Jay. Bed Bath & Beyond. Kind of your fry pan bottom, not as good fry pan bottom, but at least a breakout of this level. Now a J hook. That probably shouldn't be put there, but this one, little slow fry pan bottom with your best friend breakout on CGC. What's that tell you? More than likely, they're starting to come back into the lead stocks. And I see there's your fry pan bottom, breakout, wave 3. So just visually recognizing this gives you two places to be buying. Somewhere down in here with the expectation you're heading up to this level, or here, knowing that you've broken out. I'm doing these in pattern setups. There's your J-hook pattern on MEDP, MedPace. Observe the obvious. Look where the J-hook occurred. Right smack dab off the T-line /50 area. Where's your next likely target? I would suspect up here, as wave 3 and wave 1 are going to be the same. There's a J-hook pattern setup. Get ready to buy this on positive trading, or you buy it at this level. But you can visually see wave 1, wave 2, going into wave 3. So even if you missed this right here, at least you can calculate what the magnitude of this move should be based on this move. That looked like about 5 points, 4 points. Takes you up into the $22 area. V-ray, fry pan bottom. There's your breakout. There's your message. What are they telling you now? The profit taking's over. You can be buying this one. AMDA. Look at your fry pan bottom on that one. Now look what you're going into. J-hook pattern. You can be a buyer of this one above that level. CERN, J-hook pattern. Look at your left-right combo off the T-line. Wave 1. Look for about 77, 78 on that next move. KLAV. There's your belt hold. There's your belt hold, J-hook potential. Another one you can buy on positive trading. Just use the T-line as your stop. Cradle pattern. 4 or 5 little dojis. You can get ready to buy this one. Scoop pattern. Here's your little scoop. This one can be bought on positive trading. So these are the ones that I will usually scan for first. The kicker signal. That's what starts things with a high probability, high profit potential. What are all these things? So there's potentially my next move, same magnitude, taking me up into this range. That was, no, I forget. KALV. KALV. Kicker signal and PDLI. Look for a lot more upside. TGTX. Kicker signal, breakout, wave 1, wave 2, going into wave 3 with great enthusiasm. Or you could also specialize on watching to see what happens when it drifts back to a support level. Nordic Tankers, NAT. Morningstar type signal right off the 50. What do you think your next price move could be? Wave 1, wave 3. And PETS, Morningstar type signal right off the 50. What's your next potential price move? Along that same magnitude. So what does this do for you? Buy signals right in an area that everybody else is watching, giving you a much higher probability that you're witnessing where everybody's stepping in to buy, putting you in the right direction at the right time. So when I'm looking for signal, there's your best signal. Again, this is going back to learn 4 or 5 signals and patterns real good and become an expert. What should we see from here? Well, if it starts trading positive, you want to be buying immediately. If it starts trading lower, you just wait until it comes back up through that level, which might be day 1, day 2, or day 3. But the fact that they did a doji gap up, your best friend, is going to be putting you in a situation where the probabilities are greatly in your favor. There's going to be more upside. AM, kind of a little best friend. Where do you think your next likely target's going to be? We did CGC, kind of your best friend breakout out of a slow curve. So the more pieces of evidence that we can put into our analysis, this one is more to illustrate, look what was happening here. Your best friend, that's what we kind of are expecting based upon the strength of that signal. Clovis, this is where you can see the fry pan bottom. This has, I like showing these type of charts because this is the type where if you're buying at the appropriate time, look at, again, your doji best friend breakout. Let me make this bigger. There's your doji best friend. Then your positive open through the 50, giving you a fry pan bottom breakout. And so the rhetorical question is, how long do I hold this? Bam. Moved up a little bit. Next day moved up a little bit. So what was our alert? What is human nature going to do? The further away we move from the T line, the higher the probability you want to start getting ready to take profits. That thing. And then observe the obvious. When they started selling it off, where was our first target? Back to the T line. Now, is this a good one to trade? Maybe, maybe not. However, there's going to be people that want to trade it. So it kind of pulled back, did a bullish harami. What could we be expecting? We could be expecting that J-hook pattern. Is there any other reason for it to reverse right here? Well, if you go to your Fibonacci retracement and do this, I didn't quite get there. So, but if I see something like this and a pullback, I'll throw the Fibonacci's on here. Not that I'm trading the Fibonacci's. I'm just trying to see what everybody else is watching as far as a pullback. Is there a rule of thumb? How many percentage points away from the T-line is too far? No percentage. Because candlestick analysis is purely visual, you can see it's close, getting a little bit further. It's way too far away compared to what it's normally done. And where are you when it does that? Way up here in the overbought area. So if you just kind of always remember what the Japanese rice traders tell us, where do people buy? They start buying exuberantly at the top. Look how the candle started getting bigger. Look how they kind of gapped up. Then they gapped up again. When it was trading up here, how far away you are from the T line compared to here, 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 here. And you're up here. And what other factor can you add into this? The fact that it just came from 5 to 17 pretty quick. Get ready to take some profits. Yeah, hang him in doji. I'd put this more in the category of a doji. Yep, the doji rule. So I don't know if I can do this. I'll try. Do very well tonight. Okay, there's your 10-minute chart. So we know, go back to where it was trading. So that's where it came back on one day. Then they gapped it up. And you're probably starting to get the fact that if you didn't close it out here, you wanted to close it out here. Now, you could be buying back here, but then you close it out here. So it's not unusual that when you're up here in the big numbers, that you might close it out here and then buy it back here. But you already know you're in an area that you should be getting ready to come back out of this position. I've got just a few more. Let's see. I think this is HEPA. Kind of the same scenario. If you bought something right here, look at our message. Say you bought on this day, and then you got this type of move. I'll try this again. I guess this was that today it got up. So here's a case where if I'd bought, held on to it, I'm probably closing it out here. Maybe I'm buying it back here, thinking, all right, they're still taking it up, but then they come back and close it out. If you cut chart off right here, what's that starting to indicate? That the sellers have started to come in this area. The message is the fact that something, we call it the message because look what happened. Some news just popped this up, but not a very good candle. They started selling after they opened it. But what was the message? The message was they gapped it up and there was profit taking. What did that gap up tell us? There's new excessive strength coming into that price move. Well, what's this tell us? Yep, there's profit taking. So when do we want to get in? When the profit taking's over. What gives us that information? There's a bullish Harami, there's a doji, and then they start taking it up. That pretty much told us the selling was over. That's when you can start buying. But the message is they gapped it up. And even though it doesn't look pretty, you got to remember the message. If they gapped it up, so get ready to buy as soon as the profit taking's over. On the short side, here's Clack. Gap down, came up, failed, brought it up again, failed. This might be in a downtrending channel. So if you need something to have as a short, just to have as kind of a hedge in the portfolio, look at fold. Big evening star signal followed by a bearish doji sandwich. Where do you think the next likely target might be? Down here at the 50. And grub. See it rolling over. kind of your evening star signal. This one you can short because what's it kind of telling us? Let me make this real small. Which way is this going? They're selling it. Every time they bring it up, hit a resistance, sell it. Bring it up, hit a resistance, selling. Bring it up. Now we can see that they're selling it again. Where do you think the next likely target could be? Right down the bottom of this channel. Okay, so the markets, you got to watch to see what it does here. What we're expecting is more upside. What do we want to see it do? We want to see it breach this level. Because if it comes up and it doesn't breach that level, it starts selling off, what's that tell you? The person started taking control, it's going to sell off. So we want to make sure this doesn't, the markets do not close below the T line, which would be selling. That would kind of give us the inclination that this drift is still in progress. I guess that's about all I got for tonight. So are there any general questions on candlestick? Hold on to your individual ones until I tell Jim to do the double line. And then you just want to do one so we can get through this pretty quick. Oh. That's Peloton. This is a fairly new tri-pan bottom J-hook. Could be a buyer of that. Dollar. Yeah, on the Dow Jones or on the transportation. On the Dow Jones. Yeah, sell signal, sell signal. Yeah, if they did another sell signal, that's kind of giving you the information that these signals will reveal to you. This is where the bears are starting to take control. Yeah, Peloton's been in the news because it's so controversial that he's telling his wife he bought an exercise bike. That's right, Jay. Can you help me with how we should have responded to Maxar last week? It was recommended by, yep. And it started getting positive, so I bought it and hit 12 and then started sliding. All right, so every time you put on a trade, take it this was the day. What do we want to see on positive trading that day? I want to see it trade positive. So if I'm buying right here, I don't know where 1150, right there. If I'm buying on positive trading and it comes up, what's a safety stop? Right, or not in this case where you bought it, but right about where it opened. The logic is if it comes up and then comes back down through that level, what's that kind of telling you? I don't want to be in that. The buyers aren't there. Worst case scenario comes down and then comes back up, you can always buy it back. Why would you buy it back? Because when it was coming in this direction, it was going in the wrong direction. When it hit here and started coming back up, it was in the right direction, confirming these signals. So, John, use the statistics that keep my emotions out of my trading. I know that probably about 30-35% of my trades aren't going to work. So if I bought here and it was trading up, I put a safety stop where it opened, or let's say where it closed, because logic says if it comes back down through there, it's not working. Now, once I mentally told myself that 1/3 of my trades really aren't going to work, that took the emotions out of my trades, because now it wasn't me that was doing the bad trade, it was just the percentages that I was aware of where it's not working. So what we do is what the sage advice is for investors: cut your losses short, let your profits run. So this is just a very simple technique that if something's not working, get right back out. I'd rather take a small loss than sit with it for the next 4 or 5 days hoping that it would be coming back. I could have taken that money and gone on someplace and found something like this and been making money with it. For the scam session, could you please also cover cost scan available from candlesticks? Yes, that's the whole point of doing all this, is we've got the already the formulated scan packages where you don't have to formulate it. You just buy the package and then you download it, and now you've got them there forever. Okay, I hope I answered that for you, John. All right. Don, through the years, I will usually put a stop in just because I advocate that if it takes you probably 7 to 10 seconds to type in a stop, so that you're not getting caught in something that you have no idea why it did it. So if I'm in an uptrend, I just bought this thinking, all right, good, I've got a J-hook pattern. But remember what the Japanese rice tell us. Japanese rice traders tell us. If you see a gap up in the overbought condition, have a stop someplace. So my stop is if they gap this up and start taking it up, it means something real good should be happening. Set your stop at where it opened, because logic says it shouldn't come back down through there. Why would you be more apt to set it stop there? Because it gapped up. That was your warning. If it opens and immediately starts selling off, I put my stop at the previous day's close. So if I'm sitting here and I'm looking at this, and so the night before I'm thinking, all right, tomorrow morning I'm going to put a stop right there. But then I see it gap up. Now I'm going to start moving that stop up or even all the way up there. Brian, no. A lot of people say, oh, if I make 10% of my trade, I'm going to close it out. Think of it this way. Most investors, I say most investors, probably 90% of investors around the world have trouble making profits in the first place. So once you find something that's going to produce a profit, why the heck are you going to limit your upside potential? I have one simple theory or one simple concept. If I'm buying based upon a candlestick buy signal, I'm selling based upon a candlestick sell signal. My profit might be 0.3%. It might be 300%. But I'm not buying because of a percentage. I'm buying because I want to see what the investor sentiment is telling me. Now, is that some type of belt hold? Not necessarily. The gap was your warning that you wanted to have your stop ready. It's surprising that such a large drop didn't change the stochastics. Well, yeah, turn it down. Remember, it's only one day. Yep. So, John, that's what most people do is they buy something. I'm trying to find something that. They buy something and a lot of times they get a little profit, and what's their first concern? Oh man, if I let this profit go to a loss, boy, would I look stupid. So they take a quick profit. On the other hand, if they buy something and it goes down, what's their rationale? Well, I'm going to hold on to it until it gets back up to where I bought it. Keeps going down, so they can't stand the pain anymore, and they close it out. That's called eating like a bird and pooping like an elephant. So I often hear people say, well, should I be buying some more of this? I bought up here. Should I be buying more down here? And the answer is no. You should be looking up here and saying, what told me not to be owning this anymore? So a lot of people say, well, should we double down or double up on our trade? The answer is no. You should never be doubling up, because you should be looking back to say, I should have got out of this trade up here instead of wondering what to do down here. Okay, Jim, go ahead and do the double line. And then 3.2 seconds, do the next double line. There's a perfect example of kind of your scoop pattern. You're in the overbought area. Where was your safety stop? I should have been at Friday's low. The logic says if it comes down through there, where's your first likely target? Back in here. Blue, that one you can be short. So this is kind of in that observe the obvious syndrome. Which way is this stock moving? Obviously down. What happens there when it comes up and hits a resistance level? We can see immediately that you've got dark cloud, bearish engulfing. Where do you think the next trajectory target's going to be? Down here somewhere at the bottom of that trend channel. PMRN. Oh, you were way ahead of me. Sorry, Gary. Yes, this one. Also a good short. Where's your next projective target? Down here. Would be right here, which would kind of coincide with that resistance level up here. UCOM, you can be buying this one. I can't. You can be buying this one, kind of your double doji sandwich. Alta, boy, this is one of those where you had the kicker signal, but whenever I see something like this, I put a stop, either here or here. The log says if it's coming down through here, it's consolidating. So you stop out. Where's the place to be buying? I'll put a buy stop right back up here because logic says this gap up kicker, if they start coming up through there, this quick consolidation or profit taking is over. Twitter, not a whole lot to write about on this one. I probably wouldn't be long or short Twitter right now. And Yum, same scenario. Just logically, which direction is this going right now? Nowhere. I'd have my money someplace else. Score, that one is a good one, a little slow breakout. I'd be buying that one. ETM, that one you watch to see if they can get up through the 50. So if you're long on this kind of fry pan bottom J hook, it needs to come up through here, and you have your safety stop just below the T line. If it comes down through there, they've failed the at the 50. USB, slow, steady uptrend, nothing wildly exciting. You can just stay long right now as long as it stays above the T line. Marathon, you can be buying this one. You can see the fry pan bottom setup. Brunswick, nothing. You can see there's really no direction on this one. If you like it and you're long, you can stay long, but you don't want to see it close back below the T line at all. Axle, getting there, but you can see the resistance level. I'd rather be buying it up here knowing that it broke out. So you can buy this one on strength. AMKR, another one you can stay long, but it needs to stay up above the T line. How did I miss some? Strava. There's your proverbial that if you were long and they gapped it up and traded higher, your safety stop was right there. Right now, you kind of, I'd be someplace else. SRNE, just stay long, 45 degree in progress. How'd this one start? There's your best friend. Lifts, stay long, kind of broke out through that level. Gap up, gap up. I'd suspect you're heading for the 200-day moving average. IC, I think we did. That's got a nice fry pan bottom breakout today. Kind of on a doji sandwich. You can still be buying this one. Home Depot started back up again. There's your bullish flutter kicker. You can buy this one on positive trading tomorrow. And Deere, you can buy this one on positive trading. Not going to be your most exciting stock. Your first target probably is the 50. Then you got to see if it can break through this downtrending channel. GGN, that's your kind of your bearish belt hold. I would have closed this one out today. You're in the overbought area. Gap up, left-right combo. If they open this lower tomorrow, close it out. Stay long on HCAT. HAXN. This one you should have closed out a couple of days ago. I wouldn't be short. Well, I'd go short if you saw this start selling off pretty hard. USB. Oops. Yeah, we did this slow uptrend. EZPW. There's your fry pan bottom. Best friend breakout. You stay long. ALKS. A little fry pan bottom. Morningstar signal bounce off the 34. You can still be buying this one with the expectation of at least coming up here, which could put you in a positive mode, and then look forward to head up to the 200-day moving average. Facebook, nothing wildly exciting. You can stay long as it stays above the T line. ETRN. This one you can get ready to buy. I'd want to see strength on it. Encina. You're getting up in the overbought area and you're not going anywhere. If this opens lower tomorrow, you close it out. There's just not any strength showing up in it. And there's your inverted hammer. Didn't get started, but now you got kind of a bullish flutter kicker, and you can see it's all coming off the 50. You can buy this one if you like it on positive trading tomorrow. Duluth. There's your best friend. Get ready to buy this because you're right there. And this is your information that they're coming in with great enthusiasm at this point. AMRN, you can still be buying this one on positive trading. OPTN, another one that you can get ready to buy, but I'd wait for it to come up through the T-line. You can see where your bullish harami occurred, right smack dab off the 50. So if you wanted to be aggressive, you could start buying, and then you just watch to see what happens once it gets to the T-line. MasterCard, steady uptrend. It has to stay above the T-line. IONS, MasterCard's not going to give you a real big percentage move. IONS, I would have closed it out today with a closing below the T-line because look what was happening. Doji, little bearish harami, shooting star. Pretty much telling you they were running out of steam on this one. And Jounce, another one you can stay long, but I'd have a safety stop just below today's low. That's it. Because you got a big shooting star. You got hanging man, shooting star, spinning top. If they start turning it over, close it out. MDB, inverted hammer. If you're short, get ready to cover this short if it opens positive tomorrow. Remember our percentages of a positive open after an inverted hammer. Probably 95% or better, you're going to be heading up. Amazon, nothing there. Caterpillar, nothing of any great consequence so far. I'd be more apt to buy it if it broke this little downtrending resistance level. CBIO, nothing there. It probably wouldn't even be short. It's kind of in a sideways trading mode. ALKS, you can get ready to buy this one. EZPW, didn't we do that one? You can be buying this one. USB, DISCA. I definitely would not be long. If you're short, you stay short, but I would have a safety stop just above today's high. And go, very unexciting. I'd probably be someplace else. APLS. And here was one where your safety stop, if you were in it from the other day, was right here at the low, which was also the T-line. Now you're doing a little doji. I wouldn't be going long just yet. I want to see bullish confirmation. Pretty much, Jay, yes. You can see that he is speedy. EYEG. Get ready to buy this one on positive trading. A little doji Morningstar type signal with a booster. Be ready to buy this, and then I would set your stop at today's open. Starbucks. You can buy this one. It's not a very exciting one either. Basically an institutional trader. And Apple sold off, and then I saw them in the news tonight where I guess they've got people that were stealing some of their information. It down another 26 cents. But right now, all you can do is stay long as it stays above the T-line. This one you can buy. There's a fry pan bottom you can buy in positive trading. EZPW. No, not really. I would suspect they're up and the T-line will move up, so you're not that far away. Verizon. Got to watch to see what it's going to do right in here, or even right in this area. If it opened lower tomorrow, I'd be out because it's telling you they aren't going to go up through this level. USRNE. Yeah, to stay long. Zoom. That's a toughie at this point. I wouldn't be short, but I wouldn't be long either. I probably wouldn't be trading this one. Pilgrim's Pride, another one that needed to get up through the breakout level. If it trades back below the T-line, close it out. No direction. And Labu opened higher, pulled back, but you're still in an uptrend. If you're long, stay long. If it opens positive, it starts trading positive, it's usually the biotechs are still working. Excuse me. All right, everybody. A dark cloud, no. Remember, dark cloud has to come more than halfway down that candle. That's just kind of a belt hold, so you need to see if it's confirming, and the confirmation still has to breach the T-line. Okay, everybody. Oh, there's Monday Night Football. I forgot about that. We'll see everybody bright and early in the morning. We'll see you then.